Hey guys, this is Ujjwal from Tickertape. How are you doing? Welcome to the webinar series on Intro to Tickertape in collaboration with Zerodha. This is the second video that we're doing in the series. In the first video that we did last week, we talked about stock overview, investment checklist, and forecasts. In this video, we'll be covering stock financials and peers. So we received feedback from you in the last video that we should be doing a Hindi version of the videos as well. So अगर आप हिंदी में इस वीडियो को सुनना चाहते हैं तो डिस्क्रिप्शन में एक लिंक है जो आपको हिंदी वाले वीडियो पे ले जाएगा. सो उस लिंक को क्लिक करके आप यही कंटेंट हिंदी में सुन सकते हैं. So let's continue in English for the remainder of this video. Just want to point out that this is a pre-recorded video and this is not live, since we wanted to make sure that there is no technical issue regarding network, because all of us are working from home. So if you have questions, we are there on the chat and we just shoot out, we'll just reply to you. All right, let's start. Let's go to tickertape.in. Let me zoom the screen in for you so that things are better visible. For our friends who are seeing this on mobile, if you see screen blurring issues, I would recommend zooming in using your finger to see it better. Sometimes YouTube puts restrictions on the quality that you can see on mobile. So try to increase the quality to the maximum by clicking on the settings option. And if it's still not visible, please zoom in. All right, so let's start. Let's first search for our first stock. Let's search for TCS. Everyone knows TCS. So this is the TCS page. Overview and forecast we've already covered in the previous video, so I won't focus on those at all, but just want to go scroll through it and give you an idea what all we have just very briefly, so that people who have not seen can see this and go and search for the first video and where we walk through all these sections in details. All right, so let's move over to financials for this video. Before we start and go into each feature on this screen, let's first look at what annual reports are, right? So that is our starting point. Financials and every number that you see on this screen and other tabs comes from the reports that are made public by the companies, right? So in the bottom section, you can see all the annual reports that the company has reported to the exchanges for different years. If I click on this, the annual report for TCS for 2020 will open. Let me zoom in again. I hope this is visible. It's too big, but let's continue. So there are multiple sections of an annual report. So it is a huge statement because it talks about the company's performance, company's strengths. So this is a table of content. So basically, there are a few major sections in an annual report, and I will not go into every section in detail because that will take a lot of time. But just want to point out that annual report is a report card for the company, right? So there are multiple public releases that a company does during the year. Most frequent of them are called earnings release, which most companies do every quarter. And then there is an annual report where they give you the report card of the company for the entire year. There are multiple sections in an annual report. We have the director's report. We have management discussion and analysis, where the management and the directors talk about strengths of the company, what opportunities they see in the future, what kind of competition they have. Then there's corporate governance report, which should also be looked at if you are evaluating how the governance of the company is going through. Letter from the CEO and letter from the chairman are also interesting sections which should be looked at as well. But let's move on to the sections that we are interested in for this video, which is the financial statements section. So what are consolidated financial statements and what is unconsolidated or standalone financial statements? Let's first understand that. So if a company has subsidiaries, right? Subsidiary means a company which is, let's say, under the parent company. So parent and children companies. The parent company is also doing some business activities, and the children companies are also doing some business activities, right? So every company has its own statement, has its own financial statements, and the parent's company statements can either be its own activities or it can be a combination of its own activities and its children's activities. So standalone or unconsolidated financial statements means the financial statements of the parent in its own capacity only, right? So it does not include the children's statements. Whereas consolidated financial statements includes all of its subsidiaries or children companies statements as well. So on Tickertape, every number that you see is consolidated number. The reason for that is that the performance of a children company's statements also affects, let's say, the performance of the entire group or the entire parent as a whole. So we believe that consolidated numbers are a better representative of how the company or the group is doing as a whole. So wherever possible, we show consolidated numbers only, even if standalone numbers are available. So that's the reason why you might see different numbers on Tickertape and some other platforms or the NSE website, for example, because NSE website reports standalone numbers only, whether it be P ratio or any other ratio that you might see on NSE website. Those are standalone numbers, but on Tickertape, we show consolidated numbers. Cool. All right. So let's move over to consolidated financial statements. Just want to walk you through. Just want to show you how this annual reports come in, how the statements come in, and how we present it. We'll go back to the platform, Tickertape page. So let's go to P&L 177. This will take a long time. Let me try to scroll quickly. Let's zoom out a bit first. I wish companies start hyperlinking table of contents to actual pages. The number of times I've scrolled through annual reports it takes a lot of time. All right, here we are. So these are consolidated numbers. Let's move to P&L first. P&L is also called the income statement. I hope you can see the screen. There's no need to squint too much if you're not able to figure out what is happening here. I'm just going to show you how general P&L statement looks like as reported by the company in their annual report, and then we'll move on to how we show it and what all abstraction we do, so that you have a better understanding or rather a better view of all these numbers presented here. So for people who are not aware of how financial statements are presented, there are three major elements of financial statements for a year for a company. We have the income statement, we have the balance sheet, and we have the cash flow. This is the balance sheet. This is the income statement or profit and loss statement. And we have the cash flow statement. Right? So let's understand these in some detail. Profit and loss statement is what my income and expenditure in a period were. Right? So it's always to do with from time X to time Y. Right? So let's say year ended March 31, 2020. What it means is that this statement is for financial year starting 1st April 2019 to 31st March 2020, which is the financial year for TCS. There are certain companies which have financial years ending in December. So they would say year ended 31st December 2020. Example is Varun Beverages, for example. So profit and loss is always in a period from date 1 to date X. Balance sheet is a report of what I hold right now, right? So it's always to do as of a date. So in this example, it's as of 31st March 2020. So how much do I hold? We'll go into details about each line item later in the product. But how much do I hold and owe? How much my liabilities are, how much my assets are, how much my equity is as of this date. So this is balance sheet. It's a point in time statement, right? And when we move over to cash flow statement, this is also a period based statement as to how much cash came in or went out in different sections. We'll go through these sections as well. In this period between date X and date Y. In this case, 1st April 2019 and 31st March 2020. So cash flow statement and income statement are period based. Balance sheet is as of a date. It's a point in time statement. Cool. All right. Now let's get back to the product. Hope you can see the screen. If you can't, please zoom in or increase the quality of the video. So there are different heads in which income statement is generally presented. So we'll keep going back and forth between what we are showing here and how it's generally presented in annual reports of other companies. There are certain reporting standards that the companies follow. There are many standards around the world. Won't go into detail on that, but more or less the reporting of different line items for different statements is consistent with each other. There's obviously room for minor deviations. With certain companies, line items might deviate from certain other companies' line items. I'll just give you a very quick example. We were looking at TCS P&L statement. If you look at, this is Unilever, which I have already opened. I don't know if you can see. Let me zoom in a bit more. So this is the P&L statement for HUL. And for comparison, this is the P&L statement for Mindtree Limited. So you'll see over a broad sense, more or less the line items match. There are some line items which are present in certain companies' P&L statements, which are not present in other companies' P&L statements. But the major items, for example, total income, which is revenue plus other income, then PBT, profit before tax, other comprehensive income, OCI, these items you would see in most of the statements. But it becomes really difficult when you want to compare between two different companies which have different reporting styles. So it becomes essential for us to standardize how we want to look at income statement. And this is where we come in. So we have taken a lot of time and pain in standardizing how the different income statement, balance sheet, and cash flow statements should look. Obviously, across different industries, there are different reporting styles adopted by different parties. So this standardization helps our users in evaluating everything in the same context, right? So let's go through these sections in detail. So what are the most important line items for an income statement? Total revenue is basically the cash that is coming by your sales. Also can be called as total sales. EBITDA is earnings before interest, tax, depreciation, and amortization. So one thing that we have done on income statement is we have not just given you line items, but we have given you the relationship between them. Right? So total revenue is this much for the financial year 2020. These are the costs associated with the income statement. So we have power and fuel costs, employee cost, selling and administrative, operating and other expenses. These are all the expenses. If I subtract all these expenses from the total revenue, I get EBITDA. EBITDA is something that most of the companies don't report, but it is one of the key profitability indicators that the market at large looks at to see how the company is faring, how much earnings before interest and tax and depreciation, the company is generating over time. Cool. Now let's talk about PBIT, which is profit before interest and taxes. So I click on this. EBITDA minus depreciation and amortization gives me PBIT, which is this number. Now PBT is profit before taxes. So obviously, if I subtract interest from PBIT, I'm left with PBT. Cool. And then what will happen? If I subtract taxes from PBT, I'll get the post-tax income, which is my net income. Net income is also called net profit. So different terminology, but it's the same number basically. So net income is also a headline profitability number that people look at while comparing different companies or while comparing the same company's performance over the years. So if we were to close everything, hide costs, and we look at net income across the years, this gives us a trend. There is an easier way on Tickertape to compare this, which I will just come to in a second. EPS is earnings per share. So basically it's net income divided by how many outstanding share units there are for the company. So it means that if 32,340 crores is the net income for TCS in 2020, how much of it is attributable to one shareholder? That is 86.24 rupees. So per shareholder, TCS generated 86 rupees of net income in 2020. Cool. Now, the company can choose to give dividends out. The decision to give dividends to its shareholders depends on a lot of reasons. I will not go into detail on those reasons, but basically, think of it as a reward for owning the stock of the company. The company decides to give you some dividend because you are a shareholder of the company. Now, the amount of dividend that is given out should also be looked at from a number of shares perspective, right? So, per share, 73 rupees of dividend was paid in 2020 to TCS's shareholders. This is also clear. Now, generally, it can be viewed as a dividend paying company is generating enough returns to pay back to its shareholders, but that is not always that straightforward. It also depends on whether the company has interesting projects where it could reinvest its, let's say, earnings, or it would rather choose to give those earnings back to its shareholders. So it depends on the stage of the company, depends on the projects that the company is currently involved in, also depends on the kind of financing, external financing the company is pursuing or has, the amount of cash the company has as well. So there are a lot of factors on why the companies pay dividends. So we won't go into detail on that, but DPS is basically amount of dividend paid per shareholder for their financial year. And payout ratio is pretty simple. It's DPS by EPS. What percentage of earnings is being paid out as dividends? So it's 73 by 86 is 84% of 0.84. Cool. So we discussed all the major line items for income statement. If you want to quickly see all the costs, just click on see costs, and all the costs are displayed. This is the formula for the cost: total revenue minus raw materials minus other costs equal to EBITDA, minus depreciation equal to PBIT, minus interest and other items equal to PBT, minus taxes equal to net income. This is the bottom line. This is the top line. Now, we might want to compare how the company is doing, right? So we want to see how the company has been faring over, let's say, the past few years. You can always look at this number and say, hey, 49,000 crores versus they're at 1,61,000 crores in this year, if we are talking about total revenue. But why not give a better way of looking at things? Enter growth view. So growth view takes as base the first financial year that we have shown for the company, and then gives you percentage growth for that metric for that year. So from FY12 to FY13, there was a 30% growth in total revenue. From 13 to 14, there was a 30% growth again. So this is how you can see how the company has been growing or shrinking in different years on different line items. This is available for all the different line items. There might be some years for which growth view might not be present. For example, if raw materials is not present for not reported by the company, then obviously there is no growth per se. So there is a reason why certain, for example, if we go to power and fuel cost, it was 573 but reported as 0 by the company in later years. So obviously growth view is not available for that because division by 0 is infinity. Alright, so this gives us a very good way to look at how costs have been changing over the years for the company, how EBITDA has been changing. We can evaluate, let's say, if EBITDA came down by 1% in FY 17-18, we can see the reason, we can try to find out the reason why this happened, and the reason why it shot up by 21% in 18-19. Was that a short-term reason? Was that a structural change that the company did? If depreciation increased by 71% in 1920, what effect did it have on EBITDA? Should I be looking at EBITDA then, or should I be looking at PBT or net income? So growth view is a very good way of visualizing how companies' income and expenses have been changing over the years. Now it's also sometimes a good idea to see the efficiency of the company, right? So I am generating 100 rupees as revenue. In this case, it's 1,61,541 rupees, crore rupees. And what percentage of that am I converting into profits? That is a measure of efficiency, right? So we use certain ratios as a market to measure that. They are called margin ratios. So margin view gives you everything as a percentage of total revenue. So you will see the first row of every column is 100%, and every other row is a fraction of that revenue. What it means is, let me go back to normal view again. EBITDA is 46,000 crore, total revenue is 1,61,000 crore. So what portion of the total revenue is being converted to EBITDA? Margin view. 28.9%. So EBITDA margin is 28.9%. Net profit margin, also called net income by total revenue, is 20%. So of the 100 rupees that a company gets as revenue, 20% of that is converted into profit. This is the net profit margin. You can see the margin view for even smaller items, like what percentage of my cost is going, revenue is going as employee cost. Substantial, right? What percentage is going as depreciation? Smaller percentage, obviously. And how much interest am I paying? Right? So all of these can be considered as margin. So no one talks about employee cost margin because that is not a term that is very common in the market parlance. But with this view, you can see what percentage of my revenue is actually going as employee cost, for example. Cool. So this is about income statement. What we also have done in addition is that we have taken certain trends and we have shown to you in the form of commentary. So we talked about EBITDA margin. EBITDA margin has been 29.27% over the last 5 years, which is an average number, versus industry's average of 24.86%, which is a good thing. Industry means the peers of TCS, other companies who belong in the same segment as TCS does. Could be Wipro, could be Tech Mahindra, other companies like TCS. Cool. And then we talk about net profit margin as well, where for the last 5 years, net profit margin has also been above the industry average. These commentary items change when you change the view because they are contextual. So in this normal view, we talk about revenue growth, So how much is the revenue growing for the company? This again is an average number over the last 5 years, and everything looks green for TCS, and that is what I guess you would expect out of a company like this. Market share is the percentage of an industry's total sales. I'm not going to repeat this, but basically how much amount of revenue that is being generated in the market is attributable to TCS. The market share for TCS is 29.96%. It actually has increased from that number to 32.5%. And similarly, we have one more commentary on the net income and comparing it to its industry base. Similarly, in growth view, we have commentaries on revenue growth and net income. So this concludes income statement. Let's move on to balance sheet. Right. So before we go into the structure of this table, let's go back to the annual report. There you go. I hope you can see it. Let me just try to zoom in a bit more. Okay. So I generally don't like coming back to annual report after looking at this and then coming back to this. This changes your perspective, but I guess we have to, just to give you an idea of how balance sheet is reported. So there are a lot of notes as well, which the companies publish along with financial statements. I won't go into details on the notes, but basically there are clarifications on certain items which might change the way you evaluate that company's financials. So what we do is that we incorporate those notes as well. I didn't see any significant note in TCS, but for a lot of companies, there are certain notes by auditors which need to be taken into account if you want to paint a fair picture of what the company's financials are. So let's get back. This is more comfortable. So balance sheet is, as I said earlier, it's a point in time snapshot of the company's, let's say, assets, liabilities, and equity. So let's look at this with an example. Let's say that I have 5 rupees in my pocket right now, right? That is my total assets. Right? We'll go into these things in detail, but for a simplified example, I have 5 rupees in my pocket right now. So as of now, my total assets is 5 rupees. Now I have to give 2 rupees to my friend. That is something that he's expecting. I had taken a loan from him and he's expecting 2 rupees back from me at some point. So my liability is 2. Now the other 3 rupees is my own. No one has any claim to it and no one can take it from me. So that those 3 rupees are my own. So that is my equity. So the balancing equation for a balance sheet statement is assets equal to liabilities plus equity. Right? So wherever you see a balance sheet, the first thing that anyone checks is the formula valid? Is the balance sheet balanced? Right? So 1,20,120 is the total assets in my pocket or TCS's pocket. Right? My liabilities is 35,000 crores. My total equity is 84,000 crores. Liabilities plus shareholder equity is 120, 120, which matches my asset. If for any balance sheet presentation or representation you see anywhere, if assets are not matching liabilities plus equity, just stop looking at it. There is something wrong that needs to be fixed. So this is the first basic principle of balance sheet. Assets equal to liabilities plus equity. Now let's look at these things in more detail. So we are looking at assets now. Now assets can be of different types. They can be current assets or non-current assets. Current assets, I clicked on this and the constituents opened up. So cash and short-term investments, total receivables, inventory, and other current assets which could not be classified into one of these three, we have put here. These comprise of current assets. Current assets means items which are assets in the short term. So if you think about receivables means my friend who actually is supposed to receive 2 rupees from me, his receivables is 2 rupees. So he is expecting to receive it in the short term. So it's current assets. Inventory, for example, is supposed to not be an asset soon, because when you sell it, it will not be in the inventory anymore. It will get you cash, right? So it will convert into cash. So inventory is also a short-term asset. So that's why it's in current assets. So this is the current asset section. Non-current assets is more or less a long-term asset, right? So one very good example is net property, plant and equipment, called the PPE. So PPE is an investment that you have done. You set up a factory, right? It's also an asset. It's producing goods for you, but it's an asset for you. But you can't, let's say if you think about in a certain way, you can't get rid of it in the very short term, because it's a long-term investment for you, right? So deferred tax assets, for example. Deferred tax assets are only applicable when you can use them in the next financial year for balancing your other tax liabilities. So it's not immediately convertible to cash. That's why it's a non-current assets. Cool. So non-current assets and current assets are the two breakdowns for total assets, and together combined they create total assets. The reason why we break down, let's say, assets and liabilities into current and non-current is to figure out how the company is doing in the short term and how the company is doing in the long term. So there are a lot of different ratios which are created and calculated on these current and non-current numbers, which gives us an idea that how the company is doing in the short term versus in the long term. Similarly, we have current liabilities. Now, in this case, the liability that I spoke about, the 2 rupees that I have to give to my friend, is payable for me, right? So I have to give it to him. That is a current liability for me. And similarly, there are non-current liabilities, which are long-term liabilities. Total liabilities is current plus non-current. Total equity is broken down as well in common stock and other, let's say, sources of equity which are attributable to the shareholders of the company. Minority interest is basically the company's share in other companies' profits, where it's a minority shareholder. Total liabilities and shareholdings matches total assets, and that's the balancing formula for a balance sheet. And this is the number of total common shares outstanding, that is 375 crore. This is not in rupee terms, but in absolute terms. So 375 crores of common shares are currently outstanding for TCS as of March 2020. Cool. If you want to see constraints at one go, just click on this, and all the constraints will be shown. If you want to hide the constraints, there you go. Now, similar to income statement, we have growth view on balance sheet as well. So for each line item, as I explained, the base number is shown here, and every year what percentage is the change in that line item is shown against every column. This is applicable for all the constituents as well. So how much has my total long-term debt changed over the years? It's in a downward trend, but there was a big number here. So anyone evaluating the company should evaluate why this happened. And accordingly, we have commentary items where we talk about debt to equity ratio, current ratio. Now we talked about, let me just try to collapse this first. And let's move on to normal view. So you see the numbers. Current ratio, for example, is current assets by current liabilities. Right? So it gives a picture of how much the assets are there in the short term to service the liabilities in the short term. Debt to equity ratio is an indicator of how much debt the company has versus how much equity the company has, and what kind of mix in capital the company has to finance its different projects. Won't go into detail on these ratios, but they are basically an indicator of the health of the company's balance sheet and how well is the company financed, whether by debt or equity or current assets by current liabilities. Cool. Now let's move over to cash flow. Again, let's go over to the cash flow section in the company's financial statements. There we go. So there are a lot of line items for cash flow. It differs from company to company, but you would see a lot of line items which are reported by different companies, but we have abstracted it and made it easier for you to consume. So let's expand net changes in cash. This is cash from operating activities. This is how much the company is generating by its regular business activities. This is cash from investing activities, whether it be investment in plants or fixed investments or investments that the company does in other securities, including other companies as well. And this is cash from financing activities. What's the cash inflow or outflow the company has experienced, either raised money or any other cash flow item related to financing of the company's operations. So net change in cash is a sum of basically these three heads, where it represents what was the company's cash level at the start of the period, and what was the company's cash level at the end of the period, right? So during this period, as I said earlier, the cash flow statement is also a period-based statement from date X to date Y. So what was the change in company's cash reserves in that period is what net change in cash represents. 1,400 crores is what the cash reserves of the company TCS increased in FY 2020. Cool. Now, working capital represents the difference or other relationship between the firm's current assets and current liabilities, right? So it more or less is the amount of money a company has to pay for its short-term expenses. Capital expenditure is the amount that the company is spending in purchasing fixed assets. And free cash flow is something that we've added quite recently, is something that a lot of people in the market use to evaluate the profitability of the company. Is a metric which gives you an idea about what is the amount of cash that is attributable to the shareholders of the company after factoring in all the intangible, let's say, operating and capex heads, right? So what is attributable to the shareholders? That is one of the major profitability metrics also looked at in the cash flow statement by different participants in the market. And we have a commentary on free cash flow growth as well, which talks about how the free cash flow growth has fared over the last 5 years versus the industry average. So everything looks green for TCS because TCS is such an interesting bullish stock at the moment. But for different companies, you would see different red and green combinations based on the metric that we're looking at. Okay, so this is the end of financials on Tickertape. One thing that we have received from a lot of our users is quarterly statements, which we don't show right now, but we are testing it right now. It's coming very, very soon, where we will be showing quarterly as well. There is an option to see quarterly results in addition to annual statements. One more thing I want to highlight is, for that, let me just quickly go to, let's say, so there are certain companies obviously who report earnings, let's say in April, but the annual statement actually comes way later. So for example, for Reliance, the annual statement has not, the annual report has not come out yet, but the earnings release associated with March 2020 has come out. So for those companies, you might see certain differences in how the data is presented, because in earnings release, the company does not give too much details about the breakdown of certain things. So for FY 2020 for Reliance, you would see certain items are missing because the full annual report has not come out. That is why the available line items from the earnings release we have collated and put down here. But when the annual report does come out for Reliance, these numbers will be updated. So you see how annual report for 2020 for Reliance has not come out. So just wanted to point that out. All right, let's move on to, let's take TCS as an example and let's look at peers now. So till now, we had been discussing a company in isolation, right? So we were discussing how the company has performed over the years, but taking the same company in view. Now we will do it by comparing it with its peers, right? So what are peers? Peers are, in this example, companies from the same subsector with IT services and consulting. I hope you can see my screen. Let me zoom in even a bit more. Before we go further, just for friends who joined later, this is a pre-recorded video that we recorded yesterday. अगर आप हिंदी में सुनना चाहते हैं इस वीडियो को तो डिस्क्रिप्शन में हिंदी के वीडियो का लिंक है, आप उसको क्लिक करके सेम कंटेंट हिंदी में भी सुन सकते हैं, वो भी अभी चल रहा है. एंड दिस वीडियो विल बी अवेलेबल ऑन द सेम लिंक इवन आफ्टर दिस broadcast finishes, so you can watch it again in case you missed something. And for friends who are watching on mobile, if certain screen is looking blurry to you, please zoom in by using your finger zooming gesture. There are certain restrictions that YouTube puts on mobile quality. First, try to increase the quality by clicking on the settings icon. If that doesn't work, please. All right, let's continue. So, as I mentioned, peers are the three peers we select for each company based on the subsector that the company belongs in. So, we have Infosys, HCL, and Wipro as peers for TCS from this subsector, IT services and consulting. There are three heads in which we compare the different metrics for these peers. We have valuation, technical, and forecast. So valuation, I will not go into too much detail on what each ratio means. These are very simple ratios, which is not in the scope of the discussion of this video. Just wanted to introduce you to how we think about peers and what all different metrics are available. So P ratio, PB ratio, and dividend yield for different companies are mentioned here. As I mentioned that sometimes you will see dash for certain companies because their full annual report has not come out. But when the annual report comes in, all of these numbers will be populated again. On the technical side, we have volatility. We have the relative strength indicator called the RSI, which is a 14 days strength indicator as to how the company has been doing from price strength perspective, and the price momentum as to what the upwards or downwards momentum for the company is and how they're at. And then we have forecast. As we mentioned in the previous video, that there are X number of analysts which cover every company, and they have broadly buy, sell, and hold recommendations on the company. So buy reco basically explains what percentage of those analysts covering those companies are actually saying that you should be buying that stock. Upside percent is the difference between the median forecast that these analysts are giving for the company versus what the price is right now. So you remember how we saw everything is looking green? So that also means that upside is less because the company might not be trading at a very attractive level. Intrinsic value, current price is more than intrinsic value because people like good stocks, right? So maybe they are overbuying company stock. So upside is negative for TCS as compared to the other peers in the same subsector. And similarly, we have 1-year forward EPS growth, which is coming from the median EPS forecast given by the different analysts. If you want to compare against more peers on these metrics, you can always click this link. Basically, what it will do is it will take you to Screener, and your relevant metrics will be pre-selected. Let's look at it for forecast as well. Compare forecast on Screener. Basically, what it did is that it selected the subsector that the company belonged to, IT services and consulting, and it pre-chose the 3 metrics that we were looking at in forecast section. Cool. So it's a shortcut for you to just jump into the Screener directly and evaluate, and then add more filters if you want to on Screener. We'll cover all of this when we look at Screener in one of the subsequent videos. Now, how do you compare the performance of, let's say, price performance of TCS versus its peers? So we have a price comparison chart here. What does it mean? So we are comparing from June 19th, 2019 to June 12, 2020, roughly 1 year. So this is an indexed chart. What it means is that on June 19, 2019, let's assume that to be the starting point, right? So June to June, June 19 to June 19, obviously 0% return. Now let's move 1 day. What happened? Sorry, 1 week. What happened in 1 week? TCS went down 25%, Infy went down 68%, SCL went up to 69%, right? So as you move ahead, what is happening is that this chart is showing how the different stocks have performed, taking June 19, 2019 as a base, right? There you go. What has happened today? In 1 year, TCS has been down 7.95%, Infy is down 7.95%, interesting, and SCL is up 6.76%. Now let me change it to last 3 months. So easy, right? Now in the last 3 months, this is the relative performance of these stocks. Now let me try from let's go to May. Let's say from 28th May to 4 June. So this gives you a very good way to compare different peers charts in different custom ranges that you might have or might want to look at. You can even change the comparison stocks for whatever reason. Let's say I want to compare it to Reliance. There you go. I want to compare it to Mindtree. Done. Last 1 year. Done. So I use this chart a lot to understand how different companies have been performing. It gives me a very good idea starting from the same index level and seeing where the company has performed in comparison to each other. Cool. So great, that concludes peers as well, and it concludes this video as well. We covered financials, the different statements, and peers, and how to compare them on Screener. Thanks a lot for your time. Just want to reiterate that this is second video in a 7-video series that we are doing on Intro to Tickertape. In the next one, we'll be talking about holdings, events, and news, which will cover all the sections and stock pages. And then we'll move on to index and ETF pages. And then the most interesting thing for a lot of users, and you've been getting a lot of requests, is on Screener. We'll do 2 videos on Screener. And then we'll close out with portfolio insights on Zerodha. Great, thanks a lot for your time. I understand that I took about 50 minutes of your time, but appreciate it a lot, and I'll see you in the next one. Bye bye.